Hello guys and girls, and welcome back here for another video on the ChainLog YouTube channel for the study case 2.1. I will call it, because we are still watching the crypto dominance and the stablecoin dominance, or the dollar denominated assets dominance and the dollar pegged asset dominance. And but in this case we're watching also a new ratio that I come up with, and we are going to see if we can go to something from this. I'll give you some update on this chart also, and as you see, I'm using the area tool on the trading view. I'm trying to get you to see what we are talking about today. We are talking about the crypto dominance. So this is the chart I developed, that is the Bitcoin dominance, the Ethereum dominance, and the altcoins dominance all together. That leads us to the crypto dominance in general, where crypto stays as dollar denominated assets in the crypto markets. Okay, so this is not taking into consideration any other market, only crypto. And here we are watching that. Meanwhile, here we're watching dollar pegged assets, or if you want to call it stable coins. So this is stable coins dominance, and is the actual Bitcoin dominance, Ethereum dominance, and altcoin dominance, just subtracted from the 100 total percent of the crypto market itself. And what it remains are USDT, USDC, BUSD, TUSD, HUSD, every other dollar pegged asset or stable coin in the market, and this is the dominance. And we are going to have an update here. I'll make you know something about that also, using the compare tool on TradingView, and also using the area tool. What I did to make so that I give you another video today is I took these two dominance and I made a ratio, and we are going to see that in just in a moment. But before, we are going to see how it relates to the market as of today. These two crypto dominances, or these two dominances that are the ratios I actually developed. So in first place, right here, we have the crypto dominance, or the dollar denominated asset with Bitcoins, ETH, and altcoins in general. As you see, we have 73.89% as of today. That is the percentage dominance of all three assets altogether, and they are actually in a bottom area, as you see right here, and they seems to follow very much the price itself. In the majority of the case, as you see, we have spikes when the price get up, downturns, and rapid fall when the price is coming down, and also every time we get up, it seems like to follow more or less the actual market in the last cycle, because I followed this these votes analyzing these charts. Here we have the last cycles: bull run 2017, bottom 2018. Is this yellow rectangular, and this is the bear market we had before the bull run of 2020. So 2020, 2021, this is the bull run. I just split it and divided all of this let's call it time frames, or time zones. And in this case, I saw that meanwhile in the last cycle we had this huge amount of capital of dominance getting up into the bear market, where people entered actually the bear market. As you see right here, we were this is behind is in orange is Bitcoin's price. So if you compare this to this, obviously our crypto dominance, when we were in a bear market and we got the bottom right here, slowly but slowly, with spikes, we increased the dominance of all the crypto assets in the last cycle. Meanwhile, in this case, we are seeing the opposite. And I think that from here on, we're going to see some kind of price action of movement in the dominances, exactly like this, that when we reach bottom, market price and market dominance of the crypto assets, so dollar denominated assets, so Bitcoins, Ethereum and everything else, just drop down on the dominance. Meanwhile, stablecoins will get up, and we are seeing that obviously here, that is the stablecoin dominance. You see yourself that every time we actually getting into a bear market as of today, and we start getting down from the previous all-time highs, we are seeing the stablecoin dominance rising, and more than when we are actually in a bull market. So you can actually take this stablecoin dominance in a bull market right here, as obviously you have to think about it in all the ways. So this bull market right here, in comparison to this, we had a huge influx of new market participants, and obviously they entered the market, and to enter the market they had to cash in with stable coins to buy assets on the crypto market, with every exchanges was in their disposals. So this huge amount, this huge influx of dominance about the stable coins are obviously taking into consideration also the influx of new entrants. But as you see, in the bear market, we didn't back down. The amount of stable coins we got, and the amount of influx of new entrants that led to a minting of new stable coins remained more or less more than 20%, okay, into the market. And that is an area that I was watching for, and the 20% is actually the area where we were. I don't know why it moved away. This one here was a 20. I don't know why it moved. Anyway, as you see, it made the 20%, that is the stablecoin dominance 20%. We used it as a support and as a resistance in all the bear markets and bull markets we had. And anyway, in this case, when we had this market participant, we didn't follow back to a level below the 20%. And if we do manage to do that, in that case, we're probably seeing all this stablecoin dominance getting into the crypto overall dominance right here. So this spiking up with the price probably of Bitcoin itself and Ethereum and all coins and everything else, that will follow suit, because obviously when you have this amount of stable coins on the sidelines waiting to enter to get an entry into the market, you get obviously a huge amount of opportunities to position yourself and wait for this amount to entry the market itself and to push the prices up. That is because I created, and I'm getting there, that is because I created this, that is the stablecoin to crypto dominance ratio. It actually takes in consideration, and I'm trying to make you see as better as I can, because I'm most likely on the bottom left of the screen. And as you see right here, we are taking in consideration right here the ratio, so the actual strength that the stable coins dominance has in comparison to the crypto dominance. And every time we get to a point, and I made some lines right here on the right side. On every time we get to a point where we are above the 0.38 percent, that you can actually take this. Let's make an example. If you have a crypto dominance total with Bitcoin, Ethereum, and all coins at 66%, and we have 33%, so an half of this of its dominance into the stablecoin dominance. In these charts, we'll have 0.50% because it's actually the half, okay, of the strength of the other dominance. So in this chart, we can go and we can range to 2 and also 3, 4, 5, but it never happened. Obviously, it's more likely that we are going to see this 0.1 or something like that, and the bottom is also 0, because you can't actually divide something for less than 0 when 0 is the bottom line in the market. So we are going to see here 45% we are as of today, and this means that the stable coins have a strength in comparison to the crypto dominance overall, crypto assets, that is a third, more or less, just a little bit more in this case, a third of the strength of the crypto asset dominance. And we are at high levels. I actually made these support and resistance lines, where the red ones are in a spot where if we trend below the actual, for example, 0.50% or 0.12%, that is 0.125%, because but I can't make it here on this chart, because it takes in consideration only the 2 decimals. But anyway, without technicisms, these two are obviously the more the more risky support or resistance we have on this chart. Meanwhile, obviously, we get into the middle. This is less risky, is more a sideline. Inside this 0.32 and 0.25, we're sidelined most of the time, and we don't have a clear decision in the market. But when we got below and the actual market sees a momentum for the crypto assets in general that is getting bigger. Meanwhile, stablecoins are getting lower and are entering the market to buy crypto assets. That will mean that we are experiencing an uptrend, in this case a bull run. As you see right here, every time we add in the last cycle, so in this cycle, bull run 2020-21 until now, every time we had a price action that is one of the bull run, okay, I'm trying to make you see better right here. Every time we did in fact get to a level to the 0.12%, as you see right here, we were in a place where we had a huge spike and increase into the upside, and as well we had the same amount here on the bear market that precedes that bull run, and slowly but slowly we got into a point where the stablecoin dominance were so low at this level in comparison to the crypto asset, that a bubble were put in, and we got this huge drawdown in price. Meanwhile, this recovered a little bit and got up to a point where in the bearish market, in the bear of 2021 that lasted 3 months, we had the double, almost tripled the strength of the stable coins in the market, waiting to an entry to the market, and as soon as this metric started going down again, we got a huge momentum to the upside. So how to use this ratio? How I will use it to understand the market and have a clear confirmation of what is going on. As soon as the price move in a certain direction, we want here to see if there is in this chart a divergence with the price. Let's make an example. For example, here we have this amount of movement to the upside, okay, and every time you see something like this with the trend, okay, that are following the trend, that could mean that we are seeing something something strange that could lead to a downside action. Meanwhile, because obviously the strength of a stablecoin is increasing, so people are exiting the market, are taking profit, and so the crypto assets dominance is diminishing, and this leads obviously to a downturn in the future. So in this case, instead, if we want to assess something, we should see a movement up in this case, for example, in the bear market. When we had this huge drawdown, we had this movement, a slight movement up before a rally, and the same we got right here. If we take in consideration this movement right here, we instead should see that the price is coming down. The stablecoin dominance is more like staying there, okay, more or less staying there. And as soon as we got this movement down the line, and this confirms changing the trend, we got up. That is what we are searching right now. Something that tells us that we are changing the trend and we are not moving with the actual with the price itself. When we had this movement right here and we stopped, we were actually not getting the same momentum, for example right here, but at the same time the same goes for the previous cycles in a different manner, obviously, because in that case we were seeing in the crypto asset, for example right here, dominance, we were seeing that those market participants were entering the market, were not just escaping for a safe haven like we saw during this bear market. And the same went for the stable coin dominance. The stable coins dropped down in the last bear cycles. Meanwhile, in this cycle, we got up in the stablecoin dominance, as for the minting from new market participants, but also because we are actually in a risk environment, and stable coins are obviously less risky than crypto assets, and are just there probably farming in exchanges and everything else, just waiting to enter the market. So in this case, so we have the different manners of seeing these two cycles, but in the same case we got right here. So meanwhile the price was getting down, we got up and stayed up for all the time we had into the bear market. And as soon as we got down, because the last cycle, as I already said, it was the opposite, I just explained that. it was the opposite. When we started getting up with the price or the movement in the stablecoin, the crypto to stablecoin to crypto dominance ratio was falling down. So what we are seeing right now, and we are going to see forever, and what we are going to see and to watch is exactly the opposite of the last cycle, or the movement down into an area of more more risky, but for the front of this ratio getting down, so stable coins losing strength against the crypto assets in general, for a new top to be put in. In this case, instead, we are actually in the one of the higher point in the market for this ratio to be. The strength of the stable coins in comparison to the crypto asset was 0.32%, or more or less more than 1/3, actually 42%. You can take it as a whole, 42% of the crypto asset. But the last cycle we got also above that number. I don't know if in this cycle we're going to see that, because most things changes, and you know, we have a different market cap for every and single crypto asset. We have different behavior from investors, and that leads the charge. So I'm not thinking we could see that, even if it's possible. I'm not thinking we are going to see that, but I know for sure that this movement down right here, all the way down, with this movement up in the strength of the stablecoin dominance in comparison to the crypto asset, is actually putting in a bottom. And obviously this is the major point we can actually. This is not a financial advice, it's just educational purpose only, but in this case we could very well see that is one of the best point to actually enter the market. From here is just speculating if we can reach the 50% in strength or less, but at 0.45%, getting low, and so losing ground with this rally we had. As you see, the same goes for this rally we had right here. As you see, we got to a point where, meanwhile, we rallied a little bit into the. If you see, this is the price of Bitcoin, as I already said, and this is the ratio. We got down here, meanwhile the price was getting up, and the same maybe go when we start trending higher and we have this major relief rally all are waiting for, that we'll probably go and see in the next few months. And I will talk about that in my live stream. I will do probably 2 days from now, but I will make an announcement for that. And we are going to talk about a lot of things, and this is most likely what I'm going to watch in the next few days, weeks, and months using this new ratio. So I hope you like this content, guys. If you have any question about the market, I'm here as always. If you like the content, subscribe, put a like, and share this video, because it helps me a lot and helps this channel grows to let people know about the market. I'm actually going to make live streams every 2 weeks if I can, even more, but in any case, every 2 weeks more or less, we're going to have a live stream where I explain for free, with all my effort and time and all my knowledge, everything I know about the market. And I will be pleased if you help me in that sense. It's very much appreciated, your help in any circumstances. And thank you very much for watching, and we'll see you next time. Cheers.